small business owner, a freelancer, or a professional? Did you know you can pay tax on only half your income? Yes, you heard me right. Do you want to know how to save tax legally and make your tax filing process seamless? Continue watching the video to know how to save tax. Hello and welcome. I am Ekta from Clear. We have assisted more than 80,000 tax experts and 6 million tax filers. Do subscribe to support our channel and get clear explanation of finance concepts. In this video, let me show you how the presumptive taxation scheme works. Before we start, let us understand what presumptive taxation scheme is all about. To reduce the burden of compliance of small taxpayers and professionals, the government provided a scheme of presumptive taxation where the taxpayers are not required to maintain their books of accounts or get the tax audit done. As per this scheme, they are allowed to pay tax at prescribed rates. In case of business income, Section 44 AD shall apply and tax shall be paid on a deemed income of 8% or 6% of your income. And Section 44 ADA in the other case will apply to professionals where professional receipts are taxed at 50%. Okay, now let's deep dive into these sections. Let us understand to whom this section shall be applicable. This section shall apply if you are a resident, individual, HUF or a partnership firm. Please note that this shall not apply to a limited liability partnership. And this section shall apply only if your total turnover or gross receipts from the business do not exceed rupees 2 crores. Now let us look at the non-applicability. This section shall not apply to a person who is carrying on any agency business or who is earning commission or brokerage income, or somebody who is carrying on the business of plying, hiring or leasing of goods carriages, or a person who is engaged in any profession which is specified under 44 ADA, which we will cover later on. But what if your status is resident but not ordinarily resident? Can you opt for presumptive taxation? Yes, 44 AD applies to residents. Therefore, resident and not ordinarily resident can also opt for presumptive taxation under 44 AD. In case you are adopting the provisions of Section 44 AD, your income will not be computed in the normal manner but will be computed at 8% of the turnover of gross receipts from business of that year. And this rate shall be further reduced to 6% in respect of such receipts which are received through digital means before the return filing date, that is, through any account pay check or account pay bank drafts or any other electronic mode of payment. Note that this income computed under presumptive scheme will be the final taxable income of the business and no further expenses shall be deducted. Even depreciation for that matter shall not be allowed. However, the written down value of any asset which is used in the business shall be calculated as if the depreciation under Section 32 is claimed and has been actually allowed. You may have a question. What if my income is more than 8% of the turnover? In that case, you may voluntarily declare a higher income or choose to declare just 8% of your income. And now, what if my income is less than 8%, say 5%? Well, government has an answer to your question. If this income is less than 8% of your turnover, then you may declare the income at such lower rate, say 5% in our example. However, if you choose to do so and your income exceeds basic exemption limit, you will need to maintain books of accounts under Section 44 AA and get them audited under 44 AB. Now, another caveat to this scheme is that you are required to follow this scheme for the next 5 years. In case you fail to do so, presumptive taxation scheme will not be available to you for the next 5 years. Therefore, you will be required to maintain your books of accounts and get them audited. Did you understand tax payable under Section 44 AD? If yes, please write clear in the comment section below. You need to satisfy all these three conditions to be eligible for the presumptive scheme under Section 44 ADA. You must be a resident, individual HUF in partnership firm but not a limited liability partnership, and you must be a specified professional in the field of legal, medical, engineering, architectural, accountancy, technical consultancy, or interior decoration. And your gross receipts from these professions do not exceed rupees 50 lakhs. In case you are adopting the provisions of Section 44 ADA, your income will be computed at 50% of the total gross receipts of the profession from that year, that is at half, and no further deductions shall be allowed after declaring profit of 50%. So if you are a professional and if your professional receipts for the last year was rupees 10 lakhs, you would need to pay tax on only 5 lakhs under this scheme and not on the entire 10 lakhs. And similar to Section 44 AD, you can declare more than prescribed 50% profit too if you wish. However, if you declare a profit less than 50% and your income exceeds the basic exemption limit, you will have to maintain books of accounts under Section 44 AA and get your accounts audited under 44 AB. Note that the condition to opt for the scheme of 5 years is not applicable to professionals. Now let's summarize these two sections and look at how they compare. Both Section 44 AD and ADA are applicable to residents being individuals, HUF and partnership firm but not LLP. Section 44 AD applies only in case your income is not more than rupees 2 crores, and Section 44 ADA on the other hand applies when your income is not more than rupees 50 lakhs. Section 44 AD shall not apply to a person who is carrying out business of agency or who is earning commission or brokerage income, or who is in the business of plying, hiring or leasing of goods carriage, or who is engaged in a specified profession. However, Section 44 ADA has no cases of non-applicability. Advance tax for both the sections is to be paid in one single installment by 15th March of the previous year. You must use ITR 4 for return filing in both the cases. However, if you choose to declare lower profits, then you may use ITR 3 or ITR 5 as applicable. It is a big relief to the small business owners and professionals to not maintain books of accounts for their business or profession and declare a fixed percentage profit. Don't you think so? Also, the due date for tax filing is fast approaching. Filing ITR on ClearTax is simple and easy. Use ClearTax platform to self-file ITR. We also have plans where you can avail expert assistance for return filing, which also provides for post-return filing support. Furthermore, we are also available to assist you live online for 100% accurate and transparent filing. I hope this video was helpful for you. For queries related to business or taxation, you can contact our experts by clicking on the chat link provided in the description box below. Also, don't forget to subscribe to our channel for more such informative videos and stay tuned for more updates. Bye-bye.